Peter McGuire is joining us from XM. Peter, thanks for joining us this morning. The euro was pretty resilient in the face of all this downbeat economic data coming from the EU. Do we put that at the feet of the ECB?
Well, good morning, Nadine. Hello, Daniel. Yeah, I think so in a lot of ways, and we saw that US dollar come off around about that 99 level as far as US dollar index, Nadine. So you've seen that pressure to the downside. I think it's going to be a very interesting day how it plays out leading into tonight's numbers. And this could be that downdraft that is the catalyst to get the US dollar to lose some of its luster, one could say.
But then as far as the Australian dollar looks now, I know we've been seeing the European currencies move a fair bit, especially the euro right now. But how is this going to have an impact on our local name here at home?
Well, I think, Daniel, there's plenty of potential for it to edge higher from here. I wouldn't be surprised to take a 66, 66 and a half sort of handle out over the next matter of days. I feel as though that uplift will be the trade, and it's been very, very hotly contested as far as one of the featured trades from all FX markets over the last matter of 2 weeks. And there's probably in some ways it's had a little bit of a deep breath over the last 72 hours or so, and I think that it's taking in some oxygen, and I think there's plenty of push to the upside in the short term.
And when it comes to what else you're looking out to in the coming week, obviously we've got a few more data points, but the non-farms next week, I think that's going to be really the barometer for everyone to see just how the US is faring and how that's going to go for Australia as well. What do you think is going to play out there?
Yeah, I mean, those numbers are quite frightening when you're thinking, I think it's approaching that 30 million handle. So, these are uncharted waters. We haven't been down this path before. I haven't seen it in 35 years on the market. So it's the reality check is, whilst we think things are going to happen, that V-shaped recovery, is it going to be as, I think a lot of that is factored into the market at the present. It's a very, very, how would you say, the mood in the market, we've had a strong move of 16% for the Dow in the last month. I think some of that profit taking is going to go out, and it's going to be a sell-off across equities to some extent. And, we've had it baked in, that V-shaped recovery, and maybe I think it's a little bit unrealistic.
Yeah, so Peter, you just think that this is a bout of irrational exuberance for equity markets in particular?
Well, I think so in a lot of ways, Nadine. I mean, it's everyone's talked it up, and everything's been thrown at it, from the kitchen sink in the US to look what happened as far as China, look what happened as far as ECB. Everyone's getting behind it. It's been a concerted effort over the last 6 to 8 weeks, and I think the reality check was in some ways that little thing called oil. And, it's moving there at 15, 20% moves in, 8-hour trades all over the shop. And I feel as though that's giving us a clear understanding as far as the barometer from consumption for everything. And, the GDP numbers, Christine Lagarde saying that you're going to hit such and such over the next month. It's going to be a tough, hard time.
On oil, we've got a lot of the big oil names reporting. We heard from BP the other day, CapEx being pulled. We've got ExxonMobil and Chevron expected to announce the first quarter results on May the 1st. Again, most of that result will not encompass the COVID crisis, but it does encompass some of the war of production wars really between Russia and Saudi Arabia. What are we expecting from these companies? Yeah. What do you think they're going to be telling us?
Well, I think the forward earnings are going to tell everything, and what their guidance is. And the other side, of course, is from the consumption of the performance of their companies overall. Their consumption numbers are damning, and it's when you play in that space and you're across supply, which is plenty of, there's an oversupply in every factor across that industry, then you need the consumption to be very, very strong. And, by hitting down 30 million or 35 million barrels a day as far as that demand destruction, all these companies are in for a very severe hiding or a continued downside as far as share price. So it's going to be a tough, hard game where they play over the next 3 months. And in some ways, this is why that, unrealistic V-shaped recovery is probably the reality check that's going to hit us in May. I think May is going to be a tough, hard market for the equities.